If you're looking to get started investing your hard-earned money, then you can't go wrong with the advice provided in this video. In it, I'll provide an easy-to-follow guide on how to invest your first $1,000 in 2023. Whether you're new to investing or a seasoned pro looking for some fresh ideas, this step-by-step guide will help you generate returns and make sure that your money is working hard for you. I'll look at different asset classes and discuss which ones are best suited for a beginner investor. I'll also explore ways to minimize risk while still allowing for the potential of strong returns. With the right mix of investments, it's possible to achieve financial freedom in just a few years, even with an initial investment of only $1,000. Step 1. Consider goals. If you are planning to invest your first $1,000 in 2023, the first step is to consider what your goals for investing may be. Are you looking to gain a return on investment quickly? Do you want to increase your wealth over time? Or are you planning for retirement in the future? It is important that you think through these questions before investing so that any investments can help meet those goals. Once you have identified what type of returns and growths you'd like to achieve, it's time to start researching potential investments. You may want to look into stocks, bonds, mutual funds and ETFs, exchange-traded funds, as possible options. Each of these can offer different levels of risk and return depending on which ones you choose. Step 2. Research options. The second step in investing your first $1,000 in 2023 is to do your research. To make the best decisions and find the right investment opportunities, you need to be informed. You should start by learning the basics of investing, such as understanding different asset types, risk tolerance levels and potential returns on investments. You can also read up on any companies or industries that may be of interest to you. Gathering information from reputable sources will help you make an educated decision when it comes time to invest your money. It's also important to consider any fees associated with an investment account or any additional costs that may come with certain types of investments. Knowing these factors in advance will help you decide which type of account and investments are best for your situation and budget. One of the most popular investments for beginners is stocks. When investing in stocks, it's important to familiarize yourself with the different types and how they work: growth stocks, value stocks, dividend stocks, all of which offer different levels of risk and rewards. Investing in a variety of these stock types will give you a diversified portfolio that could potentially generate high returns over time. Growth stocks are those that have potential to increase in value due to positive company performance or industry trends. While they don't pay dividends, any appreciation increases the value of your shares. For example, Tesla is a high-growth stock due to its innovative products and electric vehicles gaining popularity amongst consumers. Investing in growth stocks means you should be prepared for some volatility along the way but could potentially result in huge rewards. On the other hand, dividend stocks provide regular income streams as companies share their profits with shareholders through dividends payments. This can help you build long-term wealth while providing steady returns even if there are drops in stock prices. It's also worth considering low-risk investments such as bonds or mutual funds. Step 3. Understand risk factors. When it comes to investing your first $1,000, it's important to understand the risk factors involved. The goal of any investor is always to maximize returns and minimize losses, but understanding how different investments carry with them different levels of risk can help you make informed decisions. One way to understand risk factors is by researching various investment types and pinpointing which options fit best with your financial goals. There are several online resources available, such as stockbrokers or financial advisors, that can provide helpful insight concerning specific investments and their associated risks. Additionally, it is beneficial to create a budget and set realistic expectations for an expected return on investment. This will help you decide which investments may be most appropriate given your current financial situation and time horizon. When investing, there are three main types of risk that you should be aware of: market risk, liquidity risk and sector risk. Market risk is when changes in the stock market affect the value of your investment. Liquidity risk is when it's difficult to quickly liquidate an asset for a cash equivalent amount without significantly impacting its sale price. Sector risk is when a particular industry or sector experiences significant economic volatility. For example, if you invest in technology stocks, you may experience high volatility due to rapid changes in technology and customer preferences. Similarly, if you invest in commodities like oil or gold, their prices tend to fluctuate due to global supply and demand levels. Stocks tend to be more volatile than bonds but offer greater potential for returns. High-yield savings accounts are typically low risk, but may not provide much in terms of return. Investing in foreign currencies carries with it the risk that exchange rates could change quickly and adversely affect the value of your investment. Risk factors can be broadly divided into two categories: market and non-market related. Market-related risks include all those associated with stock prices, such as economic cycles, recessions and inflations. Non-market-related risks include currency exchange rate fluctuations, political events and natural disasters. It is also important to consider personal risk factors like an investor's age or level of experience when making investment decisions. It's essential to understand these risks before committing any money into an investment vehicle. Step 4. Choose an investment. Investing is an important part of financial planning, and having the right knowledge and resources can make all the difference. Step 4 of investing your first $1,000 involves selecting the right kind of investment vehicle for you. Knowing what options are available and understanding how they work is essential to making an informed decision. When it comes to investing, there are several different investment vehicles that you could choose from, such as stocks, bonds, mutual funds, ETFs, or index funds. Each type of investment has its own advantages and disadvantages, so it's important to do some research before deciding which one is best for you. One way to invest your first $1,000 is by focusing on stocks from companies that are well established and have solid financials. Examples include blue-chip stocks like Apple or Microsoft. These two tech giants often offer high returns and are less risky investments than some others due to their history of steady growth. Another option is investing in ETFs. ETFs track a group of stocks which offer diversification benefits while also reducing the risk associated with individual stock selections. Step 5. Set up account. The fifth step to investing your first $1,000 in 2023 is setting up an account. When it comes to investing, the most important thing is finding the right account for you. There are a variety of accounts available to investors, such as mutual funds, stocks and bonds, ETFs, and more. Each option has its own advantages and disadvantages, which should be taken into consideration when deciding what type of account is best for you. When choosing an account, make sure to do your research and compare different options to find one that meets your goals. Researching different products can help you understand how they work so that you can make an educated decision about which one fits your needs best. Additionally, consider the fees associated with each product as well as tax implications before making a decision. Opening an account is not difficult, and there are numerous options available. You could look into opening a retirement account such as a 401k, which allows you to save for retirement in tax-advantaged accounts. Alternatively, if you don't need the money immediately, mutual funds are a great way to diversify across stocks and bonds. For those wanting more control over their investments, online brokers like Webull offer access to commission-free stocks and ETFs. Step 6. Invest wisely. This is an important step in the process of investing your first $1,000 in 2023. To ensure you are making wise decisions with your money, it's important to do the necessary research to learn about different investment options and what kind of returns you can expect from them. For example, you may have heard about the incredible returns in cryptocurrencies like Bitcoin over the past year, but you need to understand that this asset class is extremely volatile and can be a very risky investment. Try to look into diversifying your investments across multiple asset classes like stocks, bonds, real estate, commodities and cryptocurrencies to spread out the risk. Doing this will also give you the opportunity to take advantage of different growth opportunities while mitigating any potential losses. Step 7. Track progress. If you've made it to step 7 of investing your first $1,000 in 2023, congratulations. You're well on your way to becoming a savvy investor. Now that you've invested your money, it's important to track progress and make sure it is going towards achieving the goals set out at the outset. To ensure success and get the most out of your investment, here are some tips for tracking progress. First, create a system for monitoring investments so you can keep tabs on performance over time. This could include setting up an online portfolio tracker or using spreadsheets to compare performance against benchmarks or related investments. Additionally, review reports from brokerages and financial advisors regularly so you know how your investments are faring in comparison to others in the market. Investing your money in 2023 can seem intimidating, but with the right plan and a clear understanding of the process, it's easier than ever to get started. Anyone can successfully invest their first $1,000 for greater financial security and stability, regardless of their experience or knowledge. Please keep in mind that I am not a financial advisor. I will only share my opinions with you, and you should always do your own research before investing. I hope you have found some value in today's video. Thank you for watching, and until next time.